Good afternoon and happy Thursday, everyone. This is Scott Wohlers with River Place Capital. It is Thursday, April the 3rd. I'm going to take just a brief minute to discuss what markets did last week as we were trying to work through this bottom and move our way upward after the correction that we saw in March. And markets last week were off. The S&P 500 was down 1.53%. The mid cap index was down 1.04%, and the small caps were right in the middle, or just right with the mid caps, down 1.10% on the week. And as we've been discussing, we are seeing that rotation from growth to value, and you're still seeing that in the marketplace today. And what's really driving the market downwards severely today, if you aren't looking at CNBC or if you haven't looked at your stock portfolio today, it is down significantly. The Nasdaq was down around 5% at the lows of the day and is hovering right around 4% as we speak right now at 12:46 on Thursday. But this is all off of the backs of the announcement from President Trump yesterday on reciprocal tariffs. And what happened was the announcement that came out was that the reciprocal tariffs were higher than many investors had anticipated and priced into the equity market. So we had known that tariffs were coming for some time, and a lot of that was priced in the market. And what you're seeing today is like you will always tend to see in the market, both on the upside and the downside, is an overreaction one way or the other. So you're seeing the market oversold today and oversold conditions this morning. And as we're talking right now, you've seen the Dow try to pare some of its losses, but still down over 1,000 points on the day. And why is that? Why are we seeing that? Well, what investors are fearful of is that the increase in tariffs and them being higher than anticipated will impact corporate earnings more and slow down the economy sooner and have a higher impact on inflation than was anticipated. Now, one thing to just address, this is a non-political statement. This is just economics and how economics works. Is a tariff is a one-time injection to or one-time increase of inflation. Prices go up. It is a pass-through tax. It is not one that is absorbed. More than likely, most of the tax is either going to be eaten by U.S. business or by the U.S. consumer. That is just how tariffs work. So you see these reciprocal tariffs go into effect. You see the market dramatically oversell on the news, but the reality is we don't know the impact yet on the economy, on corporate earnings. We are going to start getting corporate earnings for last quarter in the next 2 weeks, but we're going to be really keyed into what the guidance says moving forward, because again, the last quarter is not going to have the impact of the tariffs on it. The tariffs go into effect April 5th. Many investors also believe that this is going to be a negotiation tactic used by President Trump to get other countries to the table. Maybe wouldn't be as bad. That still may be the case. We don't know yet. This is all happening as of yesterday around 4 p.m. Eastern time. So what do you do as an investor moving forward? Well, if you have a long-term duration, a long-term time horizon, days like today are great days to go bargain hunting. There's plenty of things on significant sale today in the equity markets, both on a growth and a value perspective. So if you've had something that you've been eyeing for a while that you've wanted to buy, but it just didn't seem like the right time or just seemed too expensive, well, chances are today it's not. And it's a great opportunity for you to get back in at a lower price than what was there before. And as you've heard me say over the years, when you see reactions like this, or you see the market come down, the thesis is to run for the hills. But if you can really step back and say, wow, this is now on sale, it's 10% off of what it used to be and what it's going to be in the future, I would gladly take it 10% off. It's not a bad time to do that. So I'm not saying that this is the bottom and we can't go down a couple percent from here. It's just take advantage of what is in front of you and the opportunity that has presented itself. So if you have some positions that you're not sure about and what they're going to do for the rest of the year, it's okay to trim those today to buy something that's going to recover quicker, in your opinion, or economically is not as sensitive, or is that value sector with a dividend paying stock. Those are the ones that we foresee, at least for the near future, to continue to do well. So we still anticipate that rotation from growth to value. I mean, we're setting up very similarly to 2022, where value significantly outperformed. And before today, just to kind of put things into perspective, one last point is the growth index for the large, as in the S&P 500, so the large caps, the growth index as of last Friday was down over 10%. The value index was a little positive. You're having a lot of divergence there between the growth and the value sector. The equal weight S&P 500 is significantly outperforming the market cap weight S&P 500. So if you have questions about how to navigate this and this volatility and what is to come from these policies, give us a call. We'd love the opportunity to speak to you, help you navigate through that. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.